What's going on, guys? Welcome back to another video, and in this video I want to break down my $100,000 month strategy and give it to you guys for 100% free. Let me remind you, this strategy, it took me 11 years to craft. So if you guys take notes and pay attention for the next 10 to 15 minutes, you will get a ton of value. But before we do that, I want to do a little giveaway. I'm going to be giving away an iPad mini, AirPod Pros, and a brand new Apple Watch. There will be 3 winners to win the iPad, the AirPods, and the Apple Watch. And the way for you guys to enter into this giveaway is, first off, make sure you are subscribed to my channel. Second off, like and comment on this video. It can be as simple as an emoji. And thirdly, join the Telegram channel that I just created. There is a link in the description because that is where I am going to announce the 3 winners. Now, without further ado, guys, let's get down to business and let me show you the strategy.
Yo, if I could do it, then why can't you? Get up and make it work. Ain't no way that I'm sitting around. It's now or never, I'm picking it first. You can't tell me that I won't make it. Knew that I had the skills since birth. Grinding, came out the mud like body. I had no body, I came from dirt. Still came fuck, I put in the dirt.
All right, guys. In this video, we're going to be looking at gold. This strategy that I use, this works for indexes as well, like NQ, ES, and YM, or if you're not familiar with futures, you can look at it as US 30, the S&P 500, or NAS 100. So those are the 4 index or the 4 assets that I'm going to be looking at: NQ, ES, YM, and GC gold. For this example, we're going to be looking at gold. And this strategy, guys, is very simple. It's not complex whatsoever. So what I'd recommend doing is kind of just getting rid of everything that you've learned in the past. I've been trading for 11 years now, so I'm going to break down this strategy and make it very, very simple. If you guys are not already, go to tradeovate.com. Tradeovate is the broker that I am using, and this links directly with TradingView. So once you get your account set up on Tradeovate, you can connect it to TradingView, and I have a ton of other videos that go over the basic information on how to connect that stuff on my channel. So looking at this chart right here, I want you guys to notice that I am on the 30-second time frame. I'm not on the 1 minute, the 5 minute, the 15 minute, the 30 minute. One thing with my strategy is I'm waiting for a specific pattern to form in the market, and the patterns are forming and the candles are printing much quicker on the 30-second time frame versus the 1 minute, 5 minute, 15 minute, and all these other higher time frames. So I view this strategy as a scalping / intraday strategy. There is realistically no time to trade, but the session that will be best for this strategy is the New York session. I found recently that later in the afternoon, from around 11 a.m. to 12 p.m. PST, that 1 hour window has been absolutely amazing to trade lately. So if you guys want a little hack, that's a good time. Also from 7 a.m. to 8 a.m. PST, that's also a good 1 hour window of time to trade. It's right after the market open. It's not going to be as volatile. So looking at the chart right now, what you guys really need to be looking at, and first off, is finding a clear trend. You want to see a clear uptrend or a clear downtrend. The second part is looking at the market structure. When we're trading, guys, we want to see higher highs, higher lows, higher highs, higher lows, and higher highs for an uptrend. And for a downtrend, we want to see lower lows, lower highs, lower lows, lower highs, and lower lows. Now, as we're looking at this market structure, seeing these higher highs and these higher lows, usually when the price, or usually when the market is making a higher high, that's when we want to see it breaking previous highs. So we have a higher high, higher low, higher high, it breaks higher than the previous higher high right here, and creates a higher low. Now, vice versa for a downtrend, we want to see lower lows, lower highs, lower lows, breaking the previous lower low, and then creating a lower high. And when we are looking to get into the market, we want to be getting in on the higher lows for an uptrend, and we want to be entering into the lower highs for a downtrend. So as we're looking at the market, when it's making these lower lows and lower highs, that's when we're going to be looking for our entry. And this is a major hack right here. A lot of people do not know. When you're going into the market for a buy, you should be buying off bearish candles. When you're going into the market for a sell, You should be going into the market off a bullish candle. That is a freaking hack right there that nobody talks about. So a trade that I went into recently was actually right here on gold yesterday. I saw the price was making this nice uptrend. We had these higher highs, higher lows, higher highs, higher lows. And I saw price had made this higher high right here. And then it started to make this higher low. So what I've been using lately to get perfect entries and to give me a crazy risk to reward ratio is the Fibonacci retracement. So if you guys go right here to the settings, these are my Fibonacci settings that you guys can have for free. Take a screenshot right now, pause the video, set it up. Then you can also take a screenshot right now and set it up. So as I was looking at the market, this is what I was looking at right here. Let's go a little bit back right around here. So I saw price had made this new higher high. It was now forming bearish candles to make a higher low. And what I simply did is I got the Fibonacci's from the previous higher low to the current higher high. And I'm going from the candle's wick that resembles the low, and then the candle's body right here, this resembles a high. Now the three key levels that I'm looking at to get into the market at are these three levels right here. The 6.2, 0.62, 0.705, and 0.79. My stop loss is always right below the 100% level right here, and my take profit is always at the negative 100% level right here. So as price is starting to push to the downside, I had a pending order set right in this area. And maybe you could have one contract right here, another contract at the 705, and another contract at the 79. Or you could simply say, do you know what? I'm gonna just go based on the 0.62, the 0.705, and 0.79. It's completely up to you. So as I had my trade set up, this is what I was looking for in the market. I had my trade set up at the 6.2. My stop loss was at the negative 100% level, but I like to have it a little bit lower than the actual 100% level right here, just to be safe. If price wants to do a false breakout and hit my stop, then go up. Then my take profit is always at the negative 100% level right here. So you can see with the replay, watch what happens. Price comes down close to the 6.2, smacks the 6.2 right here on this candle. Then if we fast forward, look at this. This is why we have our stop loss right below this low right here in case it wants to do this false breakout. So when I was in this trade, I came back and looked at it. I was like, oh, this is close to my stop loss. But when I go into a trade, I am not watching the markets the whole entire time. There is an alert tab right here where you can create an alert and you can have your alert set where your take profit is and where your stop loss is. So once price goes and hits either one of those, it will notify you in your email or on the TradingView website, and it will go off as a timer and tell you, hey, your take profit got hit, hey, your stop loss got hit, and then you can basically do whatever you need to do at that point. So the duration of this trade was a little bit longer, but I'm telling you guys right now, the duration of your trades are not going to be long, usually a couple of minutes. And the way that I think of the Fibonacci with these three levels is a trampoline. You go and hit the trampoline on the higher low, you create a new higher high, you're jumping higher than the previous time. Then you come back down to hit the trampoline, you're expecting to go higher than you did the previous time. What happens? It comes and hits the trampoline. This level right here is very volatile. Notice how the 7.9, it is respected very nicely on this candle right here. The wicks do the damage. The bodies, they tell the story. The bodies are respecting the 7.9 and closing above it, showing that price does not want to go down, and the trend is your friend. It's very obvious that we're in an uptrend. Price wants to continue to push up. So as price continues to go up, what does it do? It gravitates perfectly to the negative 100% level on this trade right here. And if you guys go in, let's say you would have went in at the 705. Your risk to reward ratio would have been a 5-to-1. If you went at the 7.9, it would have been a 6, almost a 7-to-1. So as you go lower and lower on these levels, it's going to vary and differ. But the trade that I took, I think I got in yesterday at the 705 and I caught a 5-to-1. I did put it on my Instagram story. So if you guys aren't following me on Instagram, there's the link in the description where you guys can follow me. And I post pretty much every trade that I take every single day. So this is the strategy, guys. It's very simple. First off, you're on the 30-second time frame. Second off, you're looking at indexes plus gold, NQ, YM, ES, GC, gold. And then the next step is looking for a clear trend throughout the window of time during the New York session. And then fourth, you want to look for clear market structure, higher highs, higher lows, lower highs. Your entry is going to be with the Fibonacci on the lower high or the higher low. And if you follow the step-by-step process, you guys will be killing it. You're obviously gonna take some losses, but if you're using proper risk management and you're using good risk to reward ratios, which you guys are going to get on the Fibonacci's, you're gonna be freaking killing the game. So if you guys need more help with your trading, definitely check out my channel. I have a ton of other videos based around trading that will help you guys out. And watch out for that giveaway, guys. Like I said, subscribe to my channel, like and comment on this video. It can be as simple as an emoji for the comment, and then join the Telegram channel in the link in the description. And I will see you guys on the next video. Peace out.